Hey guys, how are we doing? Crypto Insight UK here, bringing you another YouTube video. So today I'm going to discuss a few things. I want to preface this video by saying that I think we're very close to heading into quite a fast expansionary period, and I'm going to summarize it and try and keep this video short, because in my newsletter today I'm going to go into a lot more detail. It's released tomorrow. I'm going to go into a lot more detail of what I think is coming and where I think we are markets wise, basically. So just to start with, CPI came in at I think 2.9% and expected at 2.9. I can't remember the exact percentage, but that's not the point. The point was it was basically unchanged. PPI came in lower than expected 2 days ago. So that means that inflation's in line with what they expected and PPI is slightly lower, which obviously gives more, well, it's basically neutral essentially. And then initial jobless claims came in higher, which is what the Fed are focusing on in terms of cutting rates. So basically what that says is, like, it suggests that we need to stimulate the economy and loosen monetary policy. So whether that's 25 basis points in September, I think we'll have probably 3 25 basis point cuts this year. I think probably what they should do is 50 bips in September. I don't think we'll get that. The poly market's pricing that in now at a 13% chance. I think it'd be mental if we do get that for the markets. But that's what I'm basically starting this video by saying is, look, I don't think there's much in the way of like holding us back in terms of what the economy is saying right now. Yes, this signals weaker economy, and that's why you loosen monetary policy, and people out there throwing around stagflation, meaning that like inflation is increasing whilst jobs are decreasing. So if you stimulate the economy, it does normally add to the inflation side, which inflation actually equals growth, because if you don't inflate, you can't grow. So inflation isn't a net bad thing. Just when inflation gets out of hand is when it becomes bad. We've just started to associate in the macro world inflation with bad, and it's not. If we don't inflate, then we will deflate, and deflate is bad. It's where the economy shrinks, obviously. We target 2% every year, or that's what it's been in the past. And at the minute, we're at like, what, 2.9? As I said, CPI is at 2.9, which is pretty decent compared to where we came from. Where did we come from? Like, I can't remember right now off the top of my head. But essentially, what I'm saying is there's no barriers in the way of the wider economy now for a rally, and a significant rally. And normally in this period is where we see us enter into euphoria, the speculation of rate cuts plus the first few rate cuts and the loosening of monetary policy. As long as we don't let the market, as we don't let the economy crash, like as in we're not too late, then you should see a rally in markets. I think people are misunderstanding where we are cyclically. Okay, so that's prefaced and done. Now, I also gave us this foundation in last week's newsletter talking about equities reaching all-time highs, the relationship between Bitcoin and gold, which is the opposite of equities, but even that starting to push to highs. And the relationship, and the reason that this is they're all pushing at the same time is because we're seeing the weakening of the dollar, and a few other things, obviously. But essentially, yeah, go and have a read of last week's newsletter if you want more of an understanding of that. So, with that being said, in the meantime, I think a lot of people understand or are starting to come round to the thought process that I've just explained there. And because of that, we also have market makers and master manipulators in the market who are going to try and shake these guys out of positions, because everyone's going to be going long now. Once they start to... The thing that we'll see is, like, as I said, we'll see the fears of stagflation, we'll see the fears of inflation. And as long as those fears stay high, we can keep running up to the upside. As soon as everyone comes on one side of the trade, they're going to get washed out to the downside, because that's how market makers play the game. Whilst there is fear, I think we'll continue to march upwards. As soon as up becomes consensus, there'll be a washout. That's what I think. That's what normally happens. And so this liquidity below us at 106 could at some point be taken for Bitcoin. We are at that key level, the levels that I said, look, these are where you need to watch for the most clear areas of reversal, here and here. And we're within that range now where I think it's most likely that if we're going to reverse, to flush this liquidity at 106, it's in this range. And I think that applies to all altcoins realistically, or all tokens realistically. Like look at ETH. I think ETH is probably similar. ETH, I said yesterday, is building this nice foundation below us. Maybe for ETH we come up to 4.8 before we potentially reverse. If we start to get to 4.8 category though, I think we're probably going to set all-time highs. It's just this hourly liquidity below us does concern me a little. And that's what I've been saying. But as I've said at the start of the video, I think we're ready to rip and roar to the upside. I don't think there's too much more I can say, and there's not much more I can show you in terms of liquidity that I haven't been showing you like every day. Doge here, let's just show you Doge on the hourly and the daily. The hourly and the daily look pretty different for like most altcoins. Like the hourly, you can argue, look, Doge is taking the upside liquidity. It's just mainly downside now. So if we could see, I think it's quite a big flush that could happen here if we did get one. It's like 20%. So I do feel like we're less likely to be seeing a move of that sort of size, because I do think, I'm taking us to the daily now, I do think alts are ready to continue up. Doge has started to enter this medium area of liquidity, and we've got more positive liquidity above us. And then if this is on the daily time frame, as I said, and that is the densest area of liquidity. We start getting above like 29, 30 cents per Doge, it's game on, based on what's happened historically. The same for XRP, and like I'm putting all or majority of the alts in this exact same basket. This is XRP on the daily. Liquidity above us is super strong. We've broken out of this downtrend that we've been discussing. Look, there's been a key trend line here. We had a daily close above it for the first time yesterday. It's game on for all-time highs for me. I think probably 420 plus for a first take profit. 360 is the technical target. Breaking that downtrend is where it came in. Like the downtrend started there, boom, you should reverse at 365. So that's the technical target, but then we look at liquidity above that. When we get up to 365, it's like this level here, you're probably starting to take this liquidity above. So that's what we're watching, okay? Aside from that, haven't got too much to share. We're going to look at Doge on a technical level. I keep talking about Doge because I think I'm going to put it on the 3-day. Because I think at some point, as long as history repeats, we will see moves like this. And this is what I've been explaining for a long time. It's what I explained before November of last year with XRP. And this is what I'm explaining now for Doge. And I think similarly for XRP as well. And I'm not, just because I'm talking about Doge here doesn't mean I'm not bullish on XRP. It's because of the structure. I'm just saying, look, this is why I've been flagging this to you guys. It's nowhere near the size of my XRP position. If I take Doge's position versus my XRP, it's 5% of the size. But if I think the structure's good, I'm going to come here and tell you about it. And that's what I've been doing. And then we've broken out of our first pennant here. We're testing to potentially break out on the 3-day of our second pennant here. Our big resistance level here is 27.5 cent-ish on the 3-day, and that is also apparent on the weekly time frame as well. So if we can get that break above that 27.5 level, then you're probably targeting the top end of this this next pennant, which is the larger pennant. And if you get the break of that, and I know this is an if, but that's how these things work, then you could say, look, we're on one of these impulses which have been getting larger at each occasion and then setting higher lows. So if that impulse is here to there, and then a low, and then here, and then a low, and then here, and then a low, and then we should go higher. And my higher target for following this simple trend is the 1.618. And that would be at around 117. And I've been saying that same thing over and over and over. Realistically, if we do get the break, and it is starting to make these sort of moves as we have historically, there's nothing to say that we can't blast straight to a 4.236, especially when we're looking at this for Bitcoin dominance, where Benjamin Cohen came in last week and footed the market and said to everybody that there was no way Bitcoin dominance could go any lower. And at that time we were in here, and then we were pushing up to the highs of this structure. And I said, look, nothing has changed yet in this structure. I put the tweet out, go and check it. Even at this level, I said, nothing has changed yet. I presume we continue to the downside. And as of right now, we've at least broken the bottom of this ascending triangle. So whether that continues to the downside, which is what I expected, that would line up with an aggressive move in Doge. And that would line up with an aggressive move in Doge if we take the economy on one side and we say, look, the foundations for a larger move are there. In fact, in terms of there's nothing specifically blocking us from a larger move now. We've got this on the monthly time frame now. We're looking at an acceleration of a month or two, maybe 3, for Bitcoin dominance, if nothing has changed cyclically. Okay, at some point, I think this will come anyway. We're at the argument and discussion now as to whether things have changed with the inclusion of stablecoins, etc., etc. And the only way, in my opinion, that I think things will have changed is that we get a more prolonged pump. But I do think there will always be a bear. There's always a bear in every market, so I don't think we're going to go up forever because that's not possible. But we could have an extended pump, and essentially, I also think, and this is where you could say, oh, have things changed? It depends on what time frame you're looking at, because you could argue, no, nothing has changed, but we could still see a significant drop in Bitcoin dominance in the 2017 cycle. This was basically the introduction of Ethereum and ICOs, but we had a 62% drop from the highs for Bitcoin dominance. And yes, the highs, look, we're at 96%. So it was a significant drop, but we were from much, much higher, where Bitcoin was pretty much the only token in the market, because Ethereum introduced ICOs. Well, in this cycle, stablecoins are not Bitcoin, and we could see the introduction of institutional stablecoins. So when or if I'm right that there could be a larger drop for Bitcoin dominance from the highs, let's have a look where 62% could get us. If we say, look, we're not repeating a 4-year, we're actually repeating an 8-year. 62% could get us all the way down to about 25% Bitcoin dominance. Now, my target is in this area here between 31 and 35%. Basically just looking structurally at this, which is how ranges play out. That's my minimum target here for Bitcoin dominance. So if I'm right, and I don't know if I will be, and I could look like an idiot in a few weeks, months time with Bitcoin, or if the market starts to bleed massively and things start to rotate back into Bitcoin, then I'm wrong. That's what it is. But that's what I think, and this is supported so far by volume, supported by history that we at least get a month or two of significant price action. And if we are repeating an 8-year cycle rather than a 4, I don't know specifically cyclically whether it's 8 years or whatever, but you can see that historically we have had a significant decrease of 62% in Bitcoin dominance before. So you can't say this time is different. Like, you can't come out and slay me and say, oh, this time, you can never say this time's different. It's not different if you look at the cycle before last cycle. If you make your fundamental base case on the market of last cycle, I think that's conservative and I think that's fair. And that's why I'll be taking profits for XRP between $8 and $12. So neither way, I'll be caught out on this. But if we look at the cycle before that, you cannot argue that Bitcoin didn't drop from 98% down to 36% because it's right there. Charts don't lie. It dropped from 98% to 38% or whatever that was. I just showed you 30. Sorry, I forgot now. 36%, which is a 60% drop. People are arguing as to why it can't do that again. I understand why you have that discussion, but clearly it has done it before, so why can it not do that again? That's my discussion, and the narratives will be, oh, blah, 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 diminishing returns, larger market cap, all this sort of shit. I don't care. I don't care what the argument is. It's shown you before that it can lose that market dominance. Before ETH ICOs and the altcoin market came into the space, people probably thought Bitcoin's the only ever crypto to exist, ish. Obviously, XRP was around as well. ETH came into the space. They're probably like, okay, there's only going to be 3. Now we've got, 40,000 or whatever stupid amount because of all the meme coins, etc. But there is no argument to me that says that Bitcoin dominance will not continue to lose strength over time. That is my base case. People believe that it's going to gain strength or hold over time. I don't think that's possible. I don't think that's possible in a world where, if we really are trying to transition our financial system, at least partly into the blockchain space, Bitcoin dominance will lose dominance over time. That's my thought process. And again, I could be wrong, but it's the only thing that makes sense to me. So I'm going to leave you basically with that. Whether we had the explosive moves in alts, and I said I'd show you XRP as well. XRP, this is the wrong chart. But XRP on the monthly, let's just take our drawings off. Again, no one can argue with me that XRP doesn't move impulsively when it moves. And the majority of the move from the 2017 move happened in 3 months. And then we had a bit of a consolidation in 1 further month, even in 2021. And I think this is a stunted cycle. And we just showed you the Bitcoin dominance drop between here and here. And you can see that effect on XRP's chart. So if I'm right with the Bitcoin dominance drop of like the 2017 cycle, and we see a move like this, then you can't really argue to me why we can't see significantly higher highs for XRP here. And I think we will. That's my base case. And whether you agree or disagree, that is absolutely fine. It's up to you what you do with your investments. I'm not here to make that decision for you. I'm just telling you what I think, and I have my chips laid in that exact same bet. And I could be wrong, and you could question me. I don't like that. Doesn't matter whether you question me or not. I sometimes argue back, and I sometimes don't bother. But whether you say, "Oh, what do I think? What do I think?" Whatever. I'm telling you now, this is what I do and what I think, and my chips are placed based on these assumptions. That's it. There's no more and no less to it than that. Doesn't matter what I say or what anyone says online. I put my money there. I've not cashed any XRP out yet. I'm in a long Doge position, and if I'm wrong, I'm wrong. If I'm right, I change my life. That's it. And I've changed my life anyway, like realistically. But if I'm right, we're good, really good. And that's where my chips are placed, and that's the bets that I'm willing to take. And I've taken a lot of risk, and I've held for a long time when a lot of people called me stupid and all this sort of stuff, and I bought throughout all of that time. Been there since 2017, but full time since 2019, 2020. So I've taken it on the chin so far, and this is the last leg. And the last leg needs to still be right, otherwise I'm back to where I was. I think I've learned a lot in the space in the time, but that's where my bets are placed. So it's up to you guys whether you agree or not. I'm not saying that you should. Take my opinion and put it in with your thesis, and then see what comes out for yourself. But that's how I feel on the markets generally. Hope you enjoyed the video, guys. If you did, please hit the subscribe button, hit the like button, and share it with a friend. It means a lot to me if you do subscribe, guys. Like, I put this content out for free. As you guys know, I don't make any money from this. I do have 2 affiliate links in the description to this video, MEXC and WEX. They're both non-KYC exchanges, and feel free to sign up to them if you want an extra exchange to use. Give them a try. Please do read my weekly newsletter. It's my pride and joy at the minute. I'm going to write it after, just as I finish recording this video and posting it out. Excited to post that again tomorrow. We're nearly at 3,000 subscribers on the weekly newsletter. Free subscribers, of course. I think 2,930 last time I checked. So thank you to everyone who subscribes to that. And please do, again, read next week's and share that with a friend if you enjoy that as well. Nothing I say on this video is financial advice, but I hope you enjoy and I hope you understand my perspective as well. Peace up, A-Town down, as Crypto Insight UK would say.